Before I go into individual stocks, I want to have a look at the S&P 500. On Monday, this headline came out. The S&P 500 has doubled from its pandemic bottom. Let me show you one of my favorite charts. So here is a chart of the S&P 500 against the Fed balance sheet. The Fed balance sheet is the blue line on the right hand side, and you've got the S&P 500 on the left hand side. Now you can see here, since the 2020 bottom in March last year, the Fed balance sheet and the S&P 500 have tracked higher together. That's no coincidence. If we take the bottom of the Fed balance sheet in 2020, that gives us a value of just over 4 trillion. 4 trillion. Then if we take the bottom on the 23rd of March, the S&P 500 hit 2,237. This Monday, the S&P 500 hit 4,479 on a closing basis, giving it an increase of 100%. On Wednesday, we had data from the Fed releasing its Fed balance sheet, as it does weekly, and that number reached 8.3 trillion. 8.3 trillion. If we look at that compared to the bottom of last year, that is an increase of 100%. It's not a coincidence that both the Fed balance sheet and the S&P 500 have doubled together. Ultimately, the money that goes into the markets has to go somewhere, and it's clear it's going into the S&P 500 and stocks. Now what this means is that if the Fed does begin to taper its bond purchases, that will impact the S&P 500, because if it impacted it on the way up, it certainly will on the way down. If we have a look at the weekly chart on the S&P 500, you can see this week's candle ran into trendline resistance, hitting a high of 4,480 before coming off. I did actually mention this in my weekly note that this was likely to happen. And you can see that here. If I just zoom in a bit. So I mentioned that from last week's candle, you can see the chart here, this same weekly chart, that the S&P 500 would continue to grind higher, hitting a new all-time high. And I suggested that we could go as high as 4,500 before putting in a longer-term top. And that's exactly what we got this week. We got a big retracement. And my view is that it's likely that we are approaching or certainly building a longer-term top. Whether that was this week or we go and test that trend line again and get to around 4,500 remains to be seen. But I do think we are in the process of building out a longer term top on the S&P 500. And if you want a copy of the free weekly newsletter, I've put the link to my website in the description box below where you can sign up to the weekly note. Right, onto individual names and stocks. So we start with Tesla. Tesla had a bad start to the week after this headline came out, where US regulators launched a formal investigation into the autopilot system of their cars. Other issues that are coming out, so delivery delays, supply chain issues, where buyers are not able to get their cars for months. And this is really the risk at the moment for not just Tesla, but all EV makers. This headline really sums it up, that the shift to going EV isn't going to be straightforward, and it will cost EV makers money in litigation, and there will be legal cases and investigations, simply because this is still a new area. It's not established. We're still in the growth phase of this innovation, and there are some headwinds here, and that's why the stock is going to move quite sharply in both directions. Not just Tesla, other EV makers like NIO and some of its rivals. When you're looking at investing in this sector, you want to ask yourself, are you willing to take the risk? Because this is a high risk area that you're investing in. I mean, here's a chart of the Tesla price versus what I've calculated as the true range. So it's kind of the extremes of how much the stock moves on a daily basis. And you can see that the stock has moved on average anywhere between $20 to $40, which currently it's doing. But it has gone as high as $100, $120. And that means that you need to be ready for that volatility. So that's the first step. And secondly, what's your time horizon? If you are trading this on a daily basis, there's going to be a lot of movement, a lot of whipsaws, great opportunities, but you're also going to get stopped out now and again. If your time horizon is much longer and you're a long-term investor, the whipsaws that you see on a daily basis are not going to impact you. And the way this stock has been trending, it's been in uptrend for some time now. And I don't really see that changing unless something fundamental happens or a technical breakdown. Now, if we look at the daily chart, you can see Tesla lost the 694 level on Monday, which was headline driven. This was a trigger for short-term traders to get out of the way as price went as low as 649. Price has held the 200-day and now looks to rebuild by reclaiming the 694 level first before looking at 750, 754. Look at how price rebounded and targeted a previous level at 694. I mentioned that in my previous video that as long as we held that, we would be on 750, but we broke down, and you can see that previous support has now become resistance. So that's your first key area. This is exactly how you find support and resistance, and it's something that I've gone through in my training video covering this in more detail. You can find the link to this video in the description box below. Now, going back to the news, we had Tesla AI Day yesterday, where the company unveiled a chip to train AI models inside its data center. Tesla also started producing cars with its custom artificial intelligence chips back in 2019. Currently, chip maker Intel, graphics card maker Nvidia are among the companies that make similar chips to train AI models. Really, what the AI Day was about was that Tesla is more than just a car maker. It's clearly a technology company, and it's looking to innovate in different areas. So you now have to try and look at this and value this differently to just a car maker. You could argue it's competing with the likes of Intel and Nvidia, and what could that do in the future if it begins to make its own chips? Tesla also mentioned they are building a new humanoid robot prototype by next year. Have a look at this. This is what the Tesla bot will look like, around 5'8" in height, and the idea is it will be able to do dangerous and boring tasks that humans don't want to do. Anyone else get the feeling that Elon has been watching Will Smith's iRobot? Soon it'll be doing your laundry, your shopping, and who knows, maybe even pick stocks for you. And that robot will probably be released in 2025, knowing Elon. If we now have a look at NIO, so like Tesla, NIO has also suffered from similar problems. Last weekend there were reports of a crash in China which hit NIO stock on Monday. An initial report indicated that the victim's NIO had hands-free driving system engaged at the time of the crash. Same reasons Tesla's getting these issues with the autopilot system, NIO is having the same issues. Apparently, a NIO had crashed in China on the weekend and was operating on navigation on pilot, a hands-free highway driving system similar to Tesla's autopilot. So you can see, as I mentioned earlier, it's not just Tesla. Other companies are going to face similar problems. This is just where the sector is right now. It's in the growth stage, the development stage, and there are going to be issues around the technology. Once they iron out and flush out these issues, there will be good times ahead, but for now it's going to be a bumpy road. I want to show you this chart. This is a price comparison between Tesla and NIO, and you can see how highly correlated they are. They almost move in tandem together. So whether you're an investor in Tesla or NIO, you're almost going to see the same price action. The only thing I would call out is, I mentioned in my previous video about China cracking down on certain sectors of their economy, certain companies, especially technology companies, and I don't believe NIO has been exempt to this. So you might see that coming through in NIO compared to Tesla, for now anyway. But as you can see, the chart clearly shows a strong correlation between both companies. If we look at the weekly chart, NIO, like Tesla, has been hit by safety concerns around its vehicles. Now, following these reports, the stock did get hit from Monday. But again, the clue was in the charts. You can see in the weekly chart here, price closed the week below a key trend line that has held for a number of weeks, giving you a clue into the downside this week. Price is now likely to test this long-term trend line, which is around 35.30. If that trend line gets taken out, That's a big change. That's a trend changer for NIO. So this is a must hold. If you're not keen on the EV sector because of the risk involved, I did mention in a previous video about getting defensive, and Merck was my pick. This headline came out this week showing Merck received another FDA approval for one of its drugs, and you can see what it's done to the technicals and the chart. Here is Merck's daily chart, and that drug approval set the price off above the 200-day, and you can see it's consolidating nicely above it. My view is that price is likely to break out now after failing before. The reason it failed before was earnings didn't come in line with expectations, and that's why the stock sold off. This time, I think price is consolidating for a break above the 200-day. Once we see that, the initial target will be around $82 to $83. So there you have it. That's my weekly update. Thanks again for watching. Remember to hit that subscribe button so you don't miss any future content. And I'll see you at the next one.